Okay. Hello and good afternoon, everyone. This is Little Stark Industries earnings call meeting. Thank you for taking time out of your day to join us and hear how our company is doing. On this call, we have various managers who will now introduce themselves. My name is Mariam Almanza. I am the product design manager, and I will hand it off to Tiffany to introduce herself, and then she's going to hand it off to the next manager.
Hi, yeah, so I'm Tiffany Johnson, and I am the CFO of Little Stark Industries as well as the drone marketing director. And Emmy is next up.
Hi, y'all. I'm Emmy. I am in charge of the camera, product design, and marketing. And then I'm going to hand it off to Yuhei.
Hello, I'm Yohei. I'm the warehouse manager of Little Stark Industries.
Great. Thank you for that introduction, ladies. To start off our call, we would like to go over our company strategy and our investor expectations. Little Stark Industries has been focusing on a differentiation strategy, which means we are creating a superior customer value compared to our competitors, and in return, our company can charge a higher price. Because Little Stark Industries focuses on customer valuation and experience, we will focus on the physical and perceived value they may hold. These three values in our product design, marketing, and our corporate social responsibility. In year 12, we met our investor expectations for all 5 of the metrics we use for the measurement of our company's success. We had high numbers in earnings per share, return on equity, our stock price gains, and our credit rating, along with our image rating. These numbers are where they're all supposed to be at, which makes us all really happy, and it makes us have hope for the growth in our company and for our future. You're probably wondering how we got these results and how we measured our performance success. It was our wonderful and strategic managers that got us to this point where we saw positive outcomes. Our net income increased and went from $119 million to $155 million. An increase in net income can lead to increases of EPS and ROE. We are able to get these company results by eliminating operating loss for Latin America region because of revenue impact, which was a decrease in 19.90%. We had an operating loss in that year for that region as well, in year 11 to year 12. So it went from negative. Once we were able to remove that area from our site, we went from negative 437,000 to a positive $5 million. This is why we decided to decrease advertising costs in this region as well. We maximized operating profit for the Europe Africa region for our camera because of revenue impact, which was an increase of plus 19.91%. We also decreased our price from $450 to $350 to increase our demand. We added retail outlets to boost demand as well. We also increased sales promotion to 16 weeks and a 25% discount to increase our demand moving forward. And on top of that, we also shortened the warranty period from 360 days to 90 days to decrease repair costs for our camera product. Finally, we decided to put our funds where it counts. So we repurchased stocks, increasing our ROE and stock price. Issuing stock has been proven to be good for increasing our ending cash. And then with that money, we have reinvested it back into our company. And we have increased our charitable donations and our innovation projects. Our credit rating was an A because we didn't take out any additional loans, and our debt to equity percentage is good because we have less debt than equity. We end up with enough ending cash that we have a better ability to pay for our debt. Our image rating has also stayed consistently high for us because our mission has been to produce ethically sourced cameras and drones. We are always actively participating in our corporate social responsibility because we believe impacting society and environment in a positive way is what makes our company run ethically and sustainable. We have invested around $13 million and $11.50 per unit sold into our CSR with a differentiation strategy. It is important that we not only focus on our physical value, but also our perceived value, that way customers have a positive image of our company. For our year 13 projections, we have high hopes for our numbers. We are continuing to run a similar strategy as we intended for year 12. And therefore, since we are projected to meet investor expectations, again, our stock price should increase by the same percentage. As you can see, all of these numbers are looking good and are looking high for our company. Again, giving us hope for our company's growth and our differentiation strategy. Finally, moving forward with our action plan. Individuals like to support businesses who do good by society. So one of the ways we can create perceived value for the customer is to improve upon our corporate social responsibility, which means an increase in our CSR, again, moving forward. To stand out and create a valuable product, our focus is to create a unique product. So we are going to improve features and spend additional money up to $10,000 for both the drone and camera research and development, to continue growing our PQ rating and making us stand out from other companies in our industry. Buying back shares is going to reduce the quantity of shares in the market, which is going to increase the revenues per share and earnings per share. This has been proven to work for our company in the past, so we want to continue doing that for our company in year 13. We're also going to continue watching out for those exchange rates. Exchange rates can drastically affect the revenues and profit received, so marketing only to the North America, Europe, and Asia Pacific regions will provide us with positive exchange rate returns instead of a negative ones that we've had in the past. Finally, we want to include robotics in our facilities to reduce labor costs and increase productivity. This will help our manufacturing process to be ran more smoothly and be able for our facilities to meet that demand whenever we hit those marks, and be able to meet what our customers are wanting of us. So that is it for our earnings call. Thank you for joining us today and hearing what we have to say about our progress and improvements. I believe Little Stark Industries has potential to be one of the top performing companies in our industry. We have faith in our differentiation strategy and the way we do business. Again, thank you for joining us today, and please feel free to ask us any questions. We would love to hear your feedback and any other improvements that you would like to see in our company. Thank you. All right, Yuhei.